Hello, good afternoon. Today we are going to present a seminar on the topic of recent development and defects in capital market. Recent development in capital market. The number one is economic liberalization due to Indian capital market. The economic liberalization has led to more deregulation, liberalization and privatization of some of the public sector undertakings in India. This has resulted in the shares of some of the public sector undertakings being made available to the public. The industrial policy adopted by the government earlier did not allow investment in core sector by the either individuals or private sector. But with the privatization of some of the public sector undertakings, the shares are now available to the public for contribution. For example, Steel Authority of India (SAIL), the Navaratna companies, consisting of major public sector undertakings such as ONGC, BAIL, Oil India Limited, Gas Authority, etc. Some of the companies which are yet to be privatized. Recently, the shares of VSNL were bought by Tatas. The second one is promoting more private sector banks. Opening of more private sector banks has resulted in the public contributing to the shares of these banks in Indian capital market. Recently, the government has announced 74% equity participation by foreigners in private sector banks in India. This has not only promoted new banks but also paved the way for the merger of existing banks with other banks. Example, the merger of Bank of Madura with ICICI Bank. The third one is promotion of mutual funds. The promotion of mutual funds by nationalized as well as non-nationalized banks has also improved the Indian capital market. They were helpful to the public by the way of tax saving schemes. For example, UTI's monthly income scheme. Mutual funds promoted by nationalized banks have increased investments. SEBI has regulated the working of mutual funds and the banks have to publish their net asset value every week by furnishing details in leading newspapers. At present, the condition of some of the mutual funds is very alarming, with the value of their investment going below the face value of the securities. Hence, there is every possibility of public losing confidence in mutual funds. Example, Unite Trust of India. The fourth one is direct foreign investment. The Foreign Investment Promotion Board, consisting of Secretaries of Industries, Finance and Foreign Affairs, have allowed more direct foreign investment in core sector, especially in power sector. Fifth one is FERA companies. Under the Foreign Exchange Regulation Act, a FERA company is one which has 40% equity participation by foreigners. This limit has been removed and now even foreign companies are allowed to have 51 equity participation. For example, Colgate Palmolive has increased its foreign equity participation from 40 to 51%. As a result, we are able to attract more foreign capital into Indian capital market. The FERA Act has since been amended and is now known as Foreign Exchange Management Act (FEMA). The sixth one is online trading in Indian capital markets. Some of the leading stock markets in India have introduced computer system for their trading activities. The brokers can get hooked and do their trading on online basis. The computer terminals will enable the public and the brokers to know the price prevailing in the market at any time. This will prevent speculation activities. Seventh one is transparency through online trading. The online trading through computer has brought in transparency to transaction in the market. People are able to know prices prevailing in the market at any time and as such as the brokers cannot deprive the clients of their profits. The manipulation in the opening and closing prices of shares by the brokers in the market is no longer possible. The eighth one is sensitivity index in Indian capital market. The calculation of index number has also undergone a change. Sensitivity index has been introduced which represents important 30 companies whose volume and value of shares determines the market condition. The sensitivity index is an indication of the conditions prevailing in the market and conditions that are likely to be encoded by the market. Next topic is Defects of Indian capital market. The main defects are inadequate disclosure of information. The second one is price manipulation, and third one is insider trading, and fourth one is lack of transparency, and the fifth one is oversubscription of shares. And next is problems related to settlement of mechanism and takeover and mergers, investment grievance, overload shares problem, inadequate protection of inventors. And thank you for, and that's the end of the presentation. Thank you. Thank you. The project is created by Simnaswarin KK, Shifna, Adnan, Faiz, and Zip, Shahana Kiti, and finally Rincha Shari.